Hey everybody, Aces St. Clair coming at you, April 27, 2016. Today is what we like to call in my world Fed Day. Today is the day that the Federal Reserve Bank makes the Federal Open Market Committee meeting results known. And what that meeting is about is whether or not the Federal Reserve is going to raise, lower, or keep same the overnight benchmark lending rate. So one of the reasons I enjoy doing these videos is I get to talk about very technical financial terms and bring them into a common language platform, which if you know me personally very well, you know I speak common language actually quite well. It's my preferred method of communication, but we can get into these technical terms as well. So essentially the benchmark lending rate is the rate that the Federal Reserve Bank is going to charge other banks when they loan them money. So the Federal Reserve Bank makes a loan to your bank puts a spread on top of that loan, and they loan you that money, and that's the rate at which you and I pay as business owners and consumers when we take out loans from the bank. So why should you care? Essentially, it's important to know what interest rates are going to be because it has to do with the rate at which you're going to repay any loans that you may get. So we're talking about things like car loans, credit card loans, real estate loans, and business loans, which we do quite well at St. Clair Funding. And so we pay attention to these things because they affect your pocketbook directly. If you're going to get, a lower interest rate on your home loan versus a higher interest rate, obviously that's just money that you're paying out the door. And so we pay attention to these things because it affects us directly. So what happened today? The Federal Reserve made their announcement. They're going to keep interest rates the same. Right now, the overnight benchmark lending rate is 0.25 to 0.50, which is very low. Historically, that's extremely low. We've only had one rate hike in the last 10 years. It was just this last December where they raised the rate from a range of 0 to 0.25%. So why is this significant? And what effect did it have in the capital markets? Well, in the stock market, I'm going to show you a chart here. You can see that we had an early morning sell-off followed by some flat activity, and then after 11 we had another little back and forth power struggle, and then we had a nice rally cruising into the later part of the day. So that's the NASDAQ chart. On the commodity side in the gold markets, we had a nice little rally this morning, a little bit of a sell-off, a flat line, and for the most part, gold ended up closing right around the same price point that it opened at real early this morning. It actually closed about $3 lower than when it started. Now, the real interesting one was oil. Like I said yesterday, crude oil has been trending upwards, and today was no exception. So, the weird thing is that actually we have more oil on hand and storage, and we have a glut of oil worldwide right now. But the price has still been going up, and that has more to do with the weakening of the dollar and currency exchanges and those types of things. But what you need to be concerned with, why you should care, is because now's the time to really fill up at the pump and plan accordingly, because the price of gasoline directly correlates to the price of crude oil. So these gasoline sellers have never met a crude oil rally they didn't like, because they're going to raise those prices at the pump for you and I. And so just plan accordingly. You're going to pay a little bit more. We've been spoiled lately. I've been getting over to Costco and Safeway Club and paying about $2 to $2.20 a gallon, and we can definitely expect that to go up. So again, why should you care? Well, these things directly affect you. They affect your pocketbook. They affect how much money you're going to be paying on your credit card loans, your home loans, business loans, and those types of things. So here's the deal. Now's the time to lock in the best prices you can get. If you have adjustable rate mortgage on your house, you should really think about trying to get it fixed. If you have credit cards that adjust, and almost all credit cards adjust, really take a look at that fine print. Get together with your financial advisor, get together with your banker, and start making moves that can position yourself, because with interest rates at a historic low, they only have one way to go, and that's up. And when that happens, essentially, we're going to be seeing some higher prices and higher payments on the money that we do borrow. So short term though, now is a great time to be in the real estate markets and buying and selling homes. So if you are in the market to try and flip some homes, definitely hit us up at St. Clair Funding, and we can put you on the right track, get you the financing you need. If you're a business owner and you're thinking about expanding, or you need to consolidate debts or what have you, regardless of your credit, hit us up at St. Clair Funding. We've been able to fund some loans that a lot of the banks just wouldn't do, and we're quite proud of the fact that we're able to help the market in that way. So that's all I got for now, folks. Weather here in Seattle today is the usual, partly cloudy, chance of showers. I'm dressed up for the gym. I'm going to go work out now, and try to work out some of this winter bod and turn it into my summer bod. So you have a good day. Thank you for tuning in, and we'll talk to you soon.